Let's get ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
All right.
There, Bruce.
All right. I love your hat. Happy Memorial Day.
My Memorial Day hat, man. Memorial Day hat.
Isn't that great? So listen, it's a great time to celebrate, spend time with the family. The market's closed today, but I want to talk a little bit about perception and what's going on in the market. So
Sure.
as we know, interest rates have been up and down. I mean, up and down. Right now, the average interest rate across the country is about 6.9% on a 30-year and about 6% on a 15-year.
Oh, wow. That's a huge spread.
So it is. It's a full point spread.
Yeah, that's huge.
Full
Okay.
point. So that, and usually it's about a half a point. So
I know.
15 years are in pretty good shape, but they both went up a little bit. Just 2 weeks ago, the 15-year was about 5.9 and it's gone up to about 6.01. So not much of a spread. You would hardly notice a difference,
No.
but when you cross thresholds from 5s to 6s or 6 to 7s, that perception in people's head
That's
can really
psychological.
get,
Absolutely.
they're psychological, right? It's just like paying points. I could say, hey, you could hit 6.85% for 2 points, or you can go 7.25% for no points. And they're like, I don't want to be in the sevens. So those are the things that we do to help customize loans to fit their needs. But I was curious because if you were, say, 25 years old right now, would that be a good time for somebody to start looking for a home that age?
Yeah, if they can afford it. If they've got stable income, they've got some savings, they're stable in their job, and they're not getting ready to jump around, because it costs money to buy and sell a house, right?
Most certainly does.
Yeah, if you need to be mobile, don't buy a house. If you're 25, which I was 21 when I bought my first house, married, had my first kid, right? When you buy your first home, if you're relatively stable, it's a great time to buy pretty much any time. That doesn't mean you're not going to go a little upside down, maybe in the first couple of years, because you could, but housing is a long-term thing. You've got to stay
You
there.
know that you have a 70% greater chance on retiring as a millionaire if you own property in your 20s.
Yeah,
70.
absolutely.
So I'm going to tell you, I've owned a lot of property, and I think you probably own more than I have. I've only had one house that I was really glad I sold. Only one.
Okay.
Okay. So all my real estate, for all intents and purposes, has been good investments. My real estate ventures have made me more money for savings for retirement than my 401k. So
Sure.
if you look at it, and you'll hear me say on my radio show, I've never met a rich renter. I haven't met a rich renter. If you look around a room, let's say you're 25 or 30 years old, and you look around a room at your friends and you go, own, rent. You tell me who has money in the bank and you tell me who doesn't. And I'll guarantee you the people that own property are more responsible and they have more money at the end of the day. Period. It's
Yeah.
just a fact.
It
So
is.
if you want to change your life, if you want a better life for yourself, for your family, for your children, for your retirement, buy real estate. And yes, you're right. It can be a struggle. I can remember when I bought my first house, it was $107,000 and I was scared to death. So listen,
Yeah.
it happens. You have those feelings, but as long as you're not getting in way over your head,
Correct.
things will come together. Every house I've ever owned and lived in, I always was like, oh, did I do the right thing? And it worked out just fine.
Yeah.
It worked out.
Absolutely. Same here. I think the only house that I wish I didn't buy, because I ended up flipping it and losing about $5,000 on it. It was just bad timing.
Yeah.
Right when the rates went from 3% to 6%.
Yeah, but you're talking about flipping too.
Yeah,
So
no, I get it.
most of what we're teaching and instilling in people is not flipper. Not
No.
everybody can stomach being a flipper or an investor. Like people think, oh yeah, you're just going to go make 50 grand on every house. No, you're not. No, you're not. And if you think you are, you're go ahead and do it and you're going to get a surprise. But
Yeah.
so I was looking, and because we're talking right now about affordability, right? Because it's really the number one issue that's keeping people from buying right now. Let's just face it.
100%.
So even though interest rates tend to seem like they're too high, I went back. 25 years ago today,
Mhm.
0.69% with 1.8 points. This time, 25 years ago,
There you go.
8.69. So that was about a full point, 2 points higher than rates are now. Then I went back 30 years because I thought, if you're 30, you definitely need to be buying a house. 7.86% and almost
Yeah.
2 points. So that's still a point higher than it is today. So if you really think things are out of reach right now, it's not interest rates. It's really just the cost of living.
It is. It is. And frankly, we all know that a couple things happened. One, post crash 2008, all the builders slowed down or stopped building, right? So we've
Yes.
produced way less houses than the increase in demand, which limits supply. And then we had ballpark 12 years of almost unlimited quantitative easing, money buying, low rates, all those things, right? There are very little periods where it even got above 5%. Most of the time it was 4, sometimes 3 and 2, right? My
Right.
neighbor across the street has a 1.9% interest rate on a 15-year mortgage. It's crazy, right? But
That's free money.
I know. But what happened during that time when money was free and cheap and easy? What happened to prices? They shot through the roof, right?
Yes, they
So,
did.
so now when rates are back to normal, the prices are still high, inventory is still low because that builders aren't building enough. And
Yeah,
we're-
but there's still more inventory right now than we've had in 15 years.
Absolutely. Yeah,
So-
there is. You know
so
what?
that-
Everybody's throwing up here on their price and they're up there. And it's tough to get them to come
So it's
down.
interesting because we saw values, and I don't really think they're values. I think they're prices. And
Yeah,
I
they
think
are,
there's a
yes.
difference. I think your value is what somebody's willing to pay. And I think our prices got out of reach. So we've actually in this area from this time last year have dropped by 2.8%. That's a significant drop.
It is.
But I don't think my value dropped. I think the prices that people wanted fell
Correct.
down to a more realistic price.
I think you're spot on there. I think you're absolutely right. And I'll tell you, I will say that I'm heavy on the listing side, right? I work mostly with listings. I put 4 properties under contract in the last 48 hours. 4. Okay. Every one of them had only been on the market for a week to 2 weeks. So, which is pretty quick these days, right? Because the
I'll
average
say-
is stay on the market for 60, 90 days. Why did they sell so quick? Because I priced them correctly. And the
Well, and you
seller,
have to have a cooperative seller to do that too. You have to have somebody that's going to listen to your professional advice.
absolutely, absolutely. By pricing them correctly, we got them sold and the sellers are going to be happy because they're getting their numbers, right? I also put a property under contract for a buyer and we actually paid full price, but we got them to give us a huge seller credit towards closing costs,
Fantastic.
right? My buyer is going to be coming to the table with very little money out of pocket. And on top of that, we got them to do all of the repairs to the roof, the electrical, and the plumbing that were needed, which a year ago, everybody would have pushed back on.
Yeah,
So
beautiful.
they gave huge credit. They did all the repairs. My buyer's going to walk into a beautiful house that's not going to need a ton of maintenance
Yeah.
for a few years at least.
So one more thing that I think we should cover today, and that is Hometown Heroes.
Oh, yeah.
So Hometown
Woodburn.
Heroes is coming back in July. The House and the Senate are still debating whether it's going to be 50 million or 100 million.
Yep.
So I want to put this in perspective for anybody out there that's listening to this. The last time we had $100 million, it lasted for about 45, 50 days. That's it.
Yep.
45 to 50 days. That was all you got. Month and a half.
And that was 100 million.
That was 100 million. And if that was already the second, that was already the second allotment of money.
So
So
actually the third, if you remember, the first
well,
time
it was the third, but it was the second of that segment.
correct. That's what I'm saying.
No.
Yeah.
So this will be the first of this segment of, because we haven't had it in 2 years, a year and a half. So I just want to prepare people. First of all, I want to share the benefits. You can make up to 144,000 in most counties.
Which is great.
That's triple. That's triple what most down payment assistance programs will allow you to make. You can be a first-time home buyer, but a first-time home buyer with Hometown Heroes means you have not owned or occupied a primary residence in the last 36 months.
Mhm.
So if you and Billy Bob got separated and Billy Bob stayed in the house and you moved out and you've lived in an apartment or somebody lived at home for 36 months and can prove it, you're a first-time home buyer, even though you still own a home. So that qualifies. You can also have a non-occupying cosigner on this type of loan. You can't do that on any other kind of down payment assistance.
Yep.
You're going to get up to 5% of the loan amount up to $35,000. Minimum $10,000. Minimum 10 grand. Okay. So now you can have 5% of the loan amount. So obviously the higher the loan you get, the more money you get. The more you put down, the less you get. It's a great program. You can make good money. Your credit scores are, you can do conventional, FHA. It's very flexible with that. They set the rates. We don't set the rates. But here's the thing. If you are not fully approved for your loan, like now, you're going to miss, because here's what's going to happen. You have to be fully approved for your loan before you can secure the funds. Then you have to be in contract. So if you wait till the end of June to make application, you're going to miss it. It's not going to be available, because what we need is right now, we need you to be fully approved, get yourself all positioned to go. And then, because June's just next week. And then we got 30 days and we don't know what day it's opening. It's coming out. They're going to announce it. I think it'll probably be early the first week, but as soon as it's there, everybody goes into contract. You got to secure it, and then it's gone. And I don't know if that money's going to last for even a month this time, because so many people really need that money because of the affordability factor.
Especially if it's only 50 million. And it's funny when you say only 50 million, but it's a lot of money, but it's not a lot of money across the state.
If it was $50 million and it was only for first responders, teachers, or veterans,
that it would probably work.
It might last a little bit, but since you don't have to be a hero to be able to get it, then it opened it up for so many more people. And to be honest with you, I almost wish they carved out a certain portion for heroes that would set it aside. Maybe take 100 million and say 50 millions for anybody. And then the other 50 million's got to be tagged for first responder or hero or veteran, but they're not. And I think they're not because of affordability, because they know people need it right now.
Yeah, they do.
So if you want to get your hands on it, that's how you get your hands on it. So go to WeBringYouHome.com, get your application made now. Then I'll get you set up with Tom and his team. And then when it's time to go sign a contract, we can secure those funds and you're ready to go.
Absolutely. Bruce,
all right. Well, listen, I got to run
some more.
It's Memorial weekend and I'm going to take the rest of the day off.
All right, man. You take the rest of the day off. I will as well.
All right. Happy Memorial to everybody out there. Thanks for watching us. Appreciate you.
Thanks, Bruce.